Boy, oh boy, what a move, what a day. Well, another great day comes to an end, guys. Hope you had a fantastic day. Hope you made some money out there today. But it's about that time of day again, right? Time to get back to work. Wednesday evening already. We're getting ready for Thursday's trading session. Not just any Thursday. We talked about this last night, right? Tomorrow is Reaction Thursday, one of my favorite trading days of the month. And as always, I'm going to cover all my favorite trades in tonight's video. That way you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, we got a lot we're going to cover in this video. Before we jump in though, make sure you subscribe to our channel, hit that notification bell so you don't miss tomorrow night's video upload. And as always, if you guys enjoyed the video tonight, do me a favor, will you? Hit that like button, drop me a shout out in the comment section. Always appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Reaction Thursday is not going to trade itself. We got a lot of great trades setting up for tomorrow. A little bit of news, so we'll definitely talk about that here tonight. What's going on here right now, though? Boy, everything is bullish. Well, oil not really bullish right now. S&P is bullish. Nasdaq is bullish. We had some very big moves going higher here today, so we definitely have some pullback opportunities we're tracking for tomorrow. Would love to get some bear trap pullbacks, and we'll talk about that in a lot of detail here tonight. But you'll notice I got some ranges, right? Anytime we see these big moves after the Fed, and we got some big earnings tomorrow, I would not be surprised if we see some ranges tomorrow. And whenever we think about ranges, we think breakouts, we think about failed breakouts, we think about traps and rotation. We're going to cover a lot about ranges and breakouts, especially failed breakouts, in tonight's video on the S&P and the Nasdaq. Got a great roadmap for all the Emini and Nasdaq traders tomorrow. Oil is pretty bearish right now into a trading range, but you will see tonight we're sitting at quite a bit of support down here. I'd love to get some fake out breakouts off the low and some reversals going higher here. So we definitely have a lot to talk about, whether you trade an S&P, Nasdaq, or crude oil for tomorrow. Now, tomorrow, speaking of tomorrow, before we jump in and talk about each of my favorite trades for tomorrow, don't forget tomorrow is a relatively wide open day. We do, of course, the jobless claims, but nobody cares. Nobody's going to be, that will definitely not be the biggest market moving event tomorrow. We do have the ECB announcement tomorrow, which generally is between 7:30 and 7:45 Eastern time. So be aware, we heard from the FOMC, the Fed here in the U.S. today. They, of course, hiked up rates 0.25%, talking about how they like the way inflation is moving, and, of course, really filling the markets with optimism this afternoon. Tomorrow, we'll hear from the ECB. So the ECB definitely has potential to really light these markets up a bit before we get to our desks here tomorrow morning in our trade room. As I mentioned in last night's video, tomorrow is the day where all the pros get back to their desks, Reaction Thursday. And don't forget, we do have some more earnings tomorrow afternoon. A couple companies you might have heard before. I'm not sure if you've heard about Amazon before, right? I'm kidding with you. But some very big companies, of course, big corporations reporting their earnings tomorrow after the close. That might lead to some range-bound markets, right? Especially on the Nasdaq. So we'll definitely be talking about ranges as we go deeper into this video. So a pretty wide open day tomorrow. Very excited for tomorrow's trading session. And so I'll see you guys tomorrow morning in our trade room. And don't forget, be careful tomorrow afternoon, because we're going to go right into that non-farm Friday. We have a lot to cover tomorrow night on tomorrow night's video, so we'll see you guys tomorrow night. We'll talk more about the game plan for non-farm payrolls on Friday. Back to our charts, though, right? Because, of course, the money is made on these charts. And, guys, if you like making money on your account, I would make sure you watch all the way to the end of this video, because I'm going to cover all my favorite trades on each of these markets. And remember, every trade idea that I talk about tonight can be applied to your favorite market. So what I talk about on the S&P can be applied to the oil. What I cover on the oil can be applied to the Nasdaq, right? So remember, make sure you watch all the way to the end, because I will build on this as we go deeper. If you like making money, you'll be rewarded for watching the entire lesson here tonight. All right, let's not waste any more time. S&P, Nasdaq, and we'll wrap up tonight on the crude oil futures. First things first here, starting off on the S&P. This is a tick chart. That's a 10,000 tick chart. All these charts tonight will be tick charts. That is the 21 EMA. You'll always see a 21 EMA on all of my charts. And be aware, as always, I do give you guys a bunch of additional larger time frames, higher time frame charts down the description of the video. We get a bunch of updates from last night's video. I've got some really interesting 60-minute and 4-hour charts for all three of these markets, and it'll be a great companion to go along with the charts you see in front of me. So if you want to see some of my bigger objectives, my bigger, longer term analysis, definitely check out the description. You'll be rewarded with some additional time frames down the description. Okay, now, what's the most important factor that we have here right now on the S&P? The most important factor is we have a very strong move higher, a pretty big move higher, and anytime we see a strong move like this in one direction, we know that buyers are going to be trying to buy low at support levels, and to get a retest of the high. Once they go back and retest the high, do we then see a pullback, bear traps below, or do we see a breakout going higher? The most important thing right now is a big bullseye right back to retest this 63 and a quarter. And if I had it my way tomorrow, what's my favorite trade for tomorrow? My favorite trade for tomorrow will be bear traps, right? Basically bear trap pullbacks. I love to get down around, for example, this little hidden pendulum swing. I love that area right there. Would love to get some bears roped in, use stops as fuel for a bear trap. My favorite trade for tomorrow, if there is a trading god listening tonight, my favorite trade here will be a really deep pullback and get this thing roped in for a whoop right back up and a big short squeeze going higher. Those are my favorites here on the S&P. But let's talk about how we can kind of make some money off of that, right? Let's talk about this. So the most important thing we have right now is if we do go lower, right? And of course, I will be talking about if we go higher, and I'll be talking a lot about potentially some range-bound markets here for tomorrow as well. So we're going to cover a lot here in a very important video here tonight. As we go lower, what you have to kind of understand is the size of this pullback is going to be relatively large. And the larger the pullback, the more profit we can make, right? Because the risk and reward is great, but the price that we pay on this is momentum. So as we go lower here, what I'd like to do is get some of these bears roped in, right? Let them try a couple times. We'll use those failure patterns you guys are learning in my free trading course to basically use stops as fuel, right? So use those stops as fuel. Now, one of my favorite trades on these is to rope in some of these bears, and then as we make the move going higher, we then grab that first pullback. We call these failure into pullback combinations in our free trading course, right? So let them try a couple times, get their stops to get run, use those sellers' stops as fuel, and then if we're lucky, we'll grab that first pullback off the moving average as it snaps right back up to retest the high. A failure into pullback combination. Now, if we really get lucky, we'll make the stronger move down. Now, whenever we see a real stronger move down, remember, we are an overall bull market right now, so we do have to be careful getting trapped down here. Couple things you want to think about. As we make that real strong move down, my favorite entry on a really deep pullback in an overall bull market, again, down the description of the video, you'll see some 60-minute and some 4-hour charts, and you'll see why I say we have a bull bias overall. If I see a really deep pullback, now that momentum is really strong. This is where you want to look for 3 different variations. Ready? First one is a crown reversal. It's bears once, it's bears twice, and a bear trap below that low. We call these crown reversals. They're basically just a 2-try failure. Bears try twice, running stops, and I like to look for that little bear trap, right? We learned about traps in the free trading course, bear trap below that low. That's one of my favorites on a really deep pullback. Another one would be we get that really strong pullback, but instead of simply failing and going back up, they pull back, they retest that low. Remember, anytime we see a strong move in one direction, we expect a retest. Once they get the retest, now I can be a lot more aggressive now. Rookies, right? Remember, professionals are going to sell high. Rookies will come in and sell low. Let's trap them in, let them try a couple times, and again, think about where their stops are. As we always talk about in my trade room, think about where their pain is, right? Think about where you can buy into their stops and light those stops up. Once we get that stop run, now pay attention on this one, because this is where the fun starts. As we get those bears trapped in, a lot of times this thing will just shoot right back up. And so you might not get, I love that. I love that first pullback, right? Those failure into pullback combinations, but you might not get that pullback. A lot of times what happens is it'll shoot right up, and as we're trying to make our way where? Back to the high of the range, back to the high of day, as we're going higher, this is where a trap entry will almost always be where the best entry is going to be, right? So imagine now we rip lower, the bears come in, they retest the low, mission accomplished. We then trap in those bears, use those stops as fuel, and then as the market races higher, promise me you're not going to chase it or simply watch, right? Because oftentimes the best entries come, I like drawing a trend line off that high, off that low, and grab that little bear trap on the way back higher, right? Those failures, and then as we say in our free trading course, first test off the low of that channel. Now, guys, I've talked a lot about failures, traps, our free trading course so far in the video. I know that most of you guys and gals have taken the free trading classes. You're learning all of these setups, making money on your own account. But hey, if you're here for the first time right now, if you haven't taken that free class, if you're one of the few folks watching who haven't learned all these setups, I'll put a link up there for you in the upper right-hand corner. Grab that link and take that free trading course, because the simple strategy I teach in that free trading course will teach you a remarkably simple trick to know where the best winning trades are most likely to be that day. And I'll share 4 different entry patterns to make it easy for you to kickstart making money on your own account. If you're missing the best trades right now, if you're taking too many losses, if you're frustrated with your results, definitely grab that link that popped up. Take that free course. It is perfect for someone trying to make the jump into full-time trading or to add another income stream. And in that free class, you'll learn all about bear traps, failures, stops as fuel, and that run back higher. Now, 2 more things I want to talk about. I told you earlier, right, there was 3 different variations down here. We've covered 2 of them. Let's talk about one more, and that, of course, is the V bottom. Every once in a while, in an overall bull market, remember, we're not a bear market. Every once in a while, we'll get this really strong run lower, and it will jackknife right back up, and it's very difficult to time the entry on those V bottoms. When that happens, watch for what I call a pop and grind reversal. What happens is all the buyers are waiting down here, and we get that big kind of bounce back up. Now watch for a pop up and a grind going higher. These are really easy. Mark off a trend line off that high, bring it down to that low, right? And then watch, mark those prior swings. And again, you want the first test off the low of that channel. And of course, this could be any of the entry patterns you guys learn in that free trading course I mentioned up top there. Could be a bear trap, like I'm showing you here. It could be a seller failure pattern, a pullback combo, a strength move. Remember, we want to get into that before we go back up, take out some of these highs, and of course, leave your profit targets back up at that high. I think that makes sense, right? That makes sense. Okay, the last thing I want to talk about here is, and again, we're going to cover going sideways, and we're definitely going to cover some moves going higher here, because you can see here we got some more. We definitely have some more space to go here on the Nasdaq and the S&P. We'll talk about it as we go higher. Now, as we go lower, what would be a reversal? We've talked a lot about bear traps down here. When would I know it's time to be a seller on this? Well, remember, at this point, we're anticipating the deep pullback and the bears struggling or retesting, then back up. If the situation happens tomorrow where they pull back to that 21 moving average and they jump off the moving average, okay? Remember, it's not enough to see a strong move, to see a strong pullback, because again, buyers are going to absorb, in most cases, in a bull bias market, the buyers are going to absorb that. But if the bears come in, if they can hold the pullback and they can just rip it, right? Jump very hard off that moving average, this is what we call a reversal. Now, I'm not going to sell that first pullback, okay? That's not a very reliable trade. That's probably a 35% trade in this condition right now, right? We can do better than that. Once I get what I call a 1, 2, 3, and again, the key is they jump and they separate off the moving average, then what we do is we mark off the high, off the low, we find a channel off the high, and we look for a bull trap above a prior swing. We look for a buyer failure above the moving average. Buyers come in, try to buy it, right? Buyer failure, use those stops, right? And we make a run going lower. Now, a really helpful tool whenever we see a reversal like this is to remember the first leg and the third leg are usually very symmetrical, right? So if we do see that strong shot lower, if they hold the pullback and jump off the moving average, again, as of right now, doesn't seem very likely, but hey, we never know what's going to happen. And I'm not really in the prediction business. I'm in the be prepared to trade whatever the market gives me business, right? That's the way you make money every day. And so once we know how big that move lower is, once we see him hold, then we take that move and we project it off that high, and that's going to help us squeeze out the maximized profit, right, on that reversal. The guys, the easiest way to make more money on your account is not to trade more often. It's get better at holding your winners to squeezing out all that profit. Does that make sense, right, on the reversal? So be careful on those deep pullbacks, because again, in this environment, it's very, very likely it gets bought right back up and go back up into that range. All right, so I think now we've covered quite a bit here now on how to buy it as it goes lower. Now, big question, what if we go sideways here, and what if we go higher? Because in all reality, look at the S&P. There's plenty of space here. That's a major objective. We got another big level overhead at 42.35 and a quarter. There's a few more up there. And again, you'll see those larger time frame charts, right? That's why I put those larger time frame, those higher time frame charts in there. You'll see those levels I'm watching for if we go higher. So let's talk about if we go sideways. Let's talk about if we go higher here over on the Nasdaq. Now, again, the Nasdaq is pretty much the same situation that we have right now. We are an overall bull market right now. You will love, again, go into the description, you'll see the 4-hour chart for the Nasdaq. Look at the 4-hour chart right now for the Nasdaq, and you can see why I say this could easily keep on expanding up to some big levels overhead, right? You'll see that stuff on that slower time frame. Just like on the S&P, I would love to get some bear traps, right? Deep pullbacks, trap in those bears, and whoop, right back up. Deep pullbacks, right? So that's the same kind of idea on the NQ. Let's talk about ranges though, right? Because you got to think, right? Big breakout higher. We may see a big range brewing because, again, of course, we've got that big announcement, those big earnings coming out tomorrow. Anytime we have a bull market into a trading range, there are basically two ways. Well, let's do it this way. 3 ways you want to make money off this. You ready? Okay, and these are pretty straightforward. And I'll tell you, if you learn these 3 techniques, you'll be well ahead of the game, and it's pretty easy to make money in ranges. The first one is, and we talked about this already, is a deep pullback, right? Now, when I get a deep pullback, remember, ranges act like magnets, right? Ranges act like magnets. What we want to do is go out and look for levels of support. below a trading range. Once the level of support gets hit, then we'll come in and we'll get those bears to come in, right? Let the bears get short off this. And once they get short, now keep in mind on this. We need a little bit more information, right? So by this time, we're going sideways. We're starting to fill out this trading range, okay? I got to mention that too, right? It wouldn't be a straight shot down. If it's a straight shot down right now, 1, 2, back up, okay? But if we start going sideways, that range becomes a magnet. Now, as we go lower, we run into support. I can't tell you how important it is to find support levels below a bull range. Then, I'm not a big fan of this. I don't try to pick the bottom, right? Because you never know how far it's going to keep going. What I like to do is wait for the bears to come in, let them try to short that pullback, and then we know exactly where we got them, right? We know exactly where their stops are. We know exactly where their pain is. We know exactly where the sellers become buyers, and we can now look for, right, that classic failure into pullback combination. And notice how I draw that channel, right? Now, obviously, I'm simplifying this right now, but this is the idea you want to look for as we pull back. We trap in the bears off a support level. We use their stops as fuel. As the market starts to jam higher in our direction, where do the buyers want to go? They want to go back and take out that high. What they really want to do is go back to that high and then find a pendulum swing. The amount we go below the range gets projected above the range, and that is really where the market wants to go. We'll talk about that here more in a moment. What I want to think about though is think about that failure and then grab that those first highs, high to high, find that low. And again, I'm simplifying it right now. We'll find any of the entry patterns. My favorite is always a trap, right? We talk about that in the free trading course. Could be a trap setup, could be a failure setup, could be a pullback combination right off of that low. So think about if we start going sideways, and remember, this can also apply to the S&P. It can also apply to the crude oil as well, right? That failure into that first test off the low. And again, try to take some, take some time. Think about where the market wants to go. It wants to go this side of the range, and then think about where that big runner target will be. Remember, we're already pretty bullish overall. So the odds are pretty good. If we trap in those bears, this thing really rotates and potentially could break out going higher. Okay, good question now. How do we trade a breakout? Yeah, I'm glad you asked. Let's keep this party going. So now, we know we got 703 overhead. We know we got a range in this example, right? So range example. Again, assume now we break out lower, we trap in, right? We rope in. Okay, now assume we take out that pendulum swing. Okay, this is where you want to look for ultimately two different types of breakout patterns. Okay, the assumption will be we're breaking through the pendulum swing. Okay, that's the assumption on this example. The first one is a 1, 2, 3 breakout. We pull back to the 21 moving average and we jump off the 21. Okay, now again, in this example, we're trapping low, we're rotating higher, we take out that high. The buyer, remember, we're not going to buy that first pullback, right? You're buying into resistance. We don't want to get in the habit of buying high. We want to buy low, right? Buy low. Again, this is not it's going to work every once in a while, but it's only probably a 45% trade, right? I'd much rather wait for a higher percentage trade if the buyers hold that pullback and really blast, right? Those 1, 2, 3 breakouts, then mark off the high, mark off that low. And this, my friends, is almost an 80% trade right there, right? So you can see why I like to wait for that one. Right? I can try to bang my head against the wall, and if you're wondering why you're not getting consistent results, if you're not making money every day, it's probably because you're taking 45% trades. I'd rather wait, take fewer trades, and get into that 1, 2, 3 with that first test. That's a tough trade to lose money on. Right? It is, right? When you've got that much momentum, you're going to get you'll get a lot of good results, right, by applying that correctly. And then again, remember, first leg, right? Third leg, that'll help you squeeze out that little bit of extra profit. Because again, when you find a good trade, let those good trades work for you. The worst thing I can do as a trader is into a good trade and cut too early. You know, you're with the bias. I'm always telling this to my students in the trade room. When you find yourself in a good entry, right? Good trades don't happen every day, all day. When you're in one, let that thing work. And by knowing where it wants to go, you can be more patient and, you know, trail the stop, right? And lock in that reward there. That's one way to trade a breakout. Another way to trade the breakout is very common. We trap in the bears, right? We roll higher and we spit and we grind. Right? This is very common when you're going with the overall directional bias. Again, you'll see why I say we're bullish overall down in the description. If we can get those bear traps, right? Trap those bears in and then whoop, right? It pops up and grinds, right? The grind is such an easy giveaway because now draw a trend line nice and tight off the highs. Bring it down off that low, right? Anchor it off that big low, right? And now we've got a channel. Remember, we don't want to buy high. We want to buy nice and low. What do? We go out, we look left, find some prior swings. And again, I'm going to keep it simple here, right? We're not going to go over all the entry patterns right now. Traps, failures, pullback combos. And again, first leg, third leg, right? That'll give you an idea of where those objectives are. All right? Makes sense? Okay. The last thing I want to talk about tonight on the NASDAQ, and remember, if we go sideways, if they break down, if they hold the pullback, it's that same reversal we talked about on the S&P a few minutes ago. All right? So all those principles still apply. Now, here's a really important question. What if we keep going higher? You know, again, the NASDAQ could easily keep on going higher. If we keep on going higher, what is the biggest problem we run into? We're buying really high up here. So remember, buyers want to buy low. And whenever a market makes an extended move and keeps on going, the longer this thing keeps on grinding higher, the deeper we're going to have to pull back to what? Attract in more buyers. So if we keep on grinding higher, my game plan is very simple. I'm going to keep adjusting these channels. I'm going to keep waiting for that deep pullback, trap in those bears, right? Failure, pull back, and snap up to retest the high. Okay, so if it goes higher, don't let that FOMO get you right. Kick in right as it goes higher. Remember, we need to get some. Well, put it this way: we need to get either a deep pullback to attract in buyers, or we have to see some sort of range up here. Right? When a market makes a strong run up and goes into a range, that range is basically telling us, okay, we're happy up here. Right? That's what happens when ranges are. And you can be a lot more aggressive when you get a range, right? But if we see a strong bull market up and it keeps going and going and going and going, eventually they will run out of buyers up here, and we need to be ready with our powder dry, right? Keep our powder dry for that nice deep pullback, and then have that discipline, that awareness that, okay, it's a big move up. They're trying to retest that high. Let's trap in some of those bears. Don't fall for the reversal, and light those stops up with a short squeeze back up. This is one of the most consistent ways to make money whenever you see a bull market that grinds and grinds and grinds and grinds. All right. So on the NASDAQ and the S&P, any market, right? Any market that goes and goes and goes, don't let FOMO trade for you. All right, guys? What do you think? What do you think, by the way? I would love to hear your ideas, your feedback. Am I on the wrong track with this? Do you agree with this? I'd love to know your opinion. I always appreciate hearing from other traders here because, I'm a trader, right? I love talking about this stuff. So let me know what you guys think in the comment section here below. Last but not least here, over on the oil. And by the way, if you are still watching this video right now, very well done, right? Because you are the person I really make these videos for. We're almost 30 minutes into the video right now. People are always telling me, got to make my videos shorter for the YouTube algorithm and all that crap, right? We all know that serious traders are dedicated. So if you're watching this right now, really, really hope I get a chance to work with you more in my trade room as a student. Because if you're this dedicated to watch the entire way through right now, you have a very bright future working with us in our trade meets morning. Anyways, off my soapbox, what's happening on oil right now? Oil has been all over the place lately. It's very much news driven right now based on Ukraine and China reopening, et cetera, et cetera. We're very much a mixed bias right now on the oil. I would definitely go into the description. There is a 60-minute chart in the description for oil, and you'll basically see why I say we're mixed. There's a big range overhead, got a big range above us up around the 80 level, but we're sitting right on some serious support. Right? So we basically, all we got was, we had that really strong run down at the beginning of the week. We pulled back and now we're retesting that level. Now, we just talked about this, right? Anytime we see a strong move, in this case, strong move down, and we retest a low, now what? Do we keep on going with a breakout? Or do we whoop right back up and take out those highs up overhead? So oil is a bit of a tricky one right now, but I think we've got a pretty good game plan for it. Now, my favorite trade, well, first of all, back up. There's a range down here, okay? Why is it important? Ranges are magnets, right? So my favorite trade for tomorrow is knowing that, and again, you'll see on the 60-minute chart in the description, knowing that we're at a support level, right? And we've now basically retested that big low. My favorite trade for tomorrow is a fake out breakout off the low. Some of the best reversals we see in our trade room are bear markets into a range. They try to break out below the range, and because ranges are magnets and because they're balanced, they like to rotate from top to bottom. If we could trap in some bears down here and use their stops as fuel, no pun intended. Okay, maybe it was, right? That would be a great way to buy going higher here. You can also see too, with that strong move down right now, remember I said earlier we call these things crown reversals, right? Crown reversals. Are you seeing one right here? See how we strong move down? The bears have tried once. I'll bet there's a lot of buyers who are waiting right below that low, nice strong signal for a whoop right back up as we go. Or possibly, again, this would be a bear trap, right? A crown reversal. Potentially a strong pop up into a grinder, right? And then grabbing that new channel and then really hitting that new channel right off of that low, right? Could be a trap, could be a failure. So these are the things on my mind here right now. So if we go higher, let's say, for example, we don't get that move going lower, right? If we go higher, the biggest challenge we have right now for the bears is that we're sitting at major support and we have a rising support trend line. This is not easy to be a short seller if you're sitting at major support. Again, big range above us around 80, right in the bigger picture, and that rising support makes it very difficult to want to be a seller. The only way to sell this right now is with a bull trap. And what I mean by that is buyers have to come in, try a couple times, and I've got to get some sort of bull trap to sell short. So this is kind of the only way that sellers can really get a good high percentage trade without kind of gambling, as we go higher. So as we go higher, sellers don't have a lot of options. I think a bull trap, right, as we go higher, a bull trap, right, selling bull traps is the best way to do it. Now, because of that rising trend line, because of that major support, we might easily pop up and begin to grind, right? Kind of grind higher, which basically is a short squeeze because the bears at that point will be knocked out, right? And the price will kind of grind higher, right? Grinders are kind of the result of the other side of the market walking away. So if that happens now, I just go out, mark off that high, mark off that low. This becomes pretty easy, right? Now we just simply wait for that first test and we grab whichever entry pattern we can get our hands on. Could be a trap like this, could be a failure, below the moving average, failure, pullback, strength move. Now on this one, again, we know that first leg and third leg are very accurate. But you got to think in a situation like this, I mean, come on, there's probably one thing on their mind now, getting right back up around that 79.38, which is the prior week close. So that would be the objective going higher. Or we pop up, buyers come down, they pull back, and they blast, right? They jump off that moving average. It's not exactly a grinder, right? It's a pop, a pull back, and a boom, right? A blast off the 21. Remember, in order for us to call this a reversal, we have to get some separation off the moving average, right? Like, see how the bears jump off the moving average right there? We want to see something like that right here. Hopefully not as big, because we want to see it pop up, grab that new channel. And again, at that point now it's a matter of being disciplined to buy low, buy at support, and find an entry setup off that low, right? Definitely eyeing that 79.38 for the objective going higher, right? That's how we trade it as it goes higher. As we go lower, it's all about either a crown reversal, nice strong signal below that low, right? Nice strong signal, very strong signal for crown reversals. At that point, right, we're not a bull market. Going to be good signal. We talk about signals for trap setups in the free trading course. Or we break down, the bears come in, they try to short this. Remember, this is a horrible place to sell. I mean, again, remember, there will be times where it will work, but if you took 100 of those trades, you're going to lose money. So it's a horrible place to sell short because, again, it's a range above us. We're at major support, big again, right? This is not a very reliable high percentage trade. But if we can get some bears to come in and try a couple times down here, these oftentimes will just whip, right, and rip back higher, profit off at the high, right? And then again, be thinking about that new channel coming over, right? Grab that first test off that channel. I love that trade. That's a great trade for tomorrow. And of course, there's always potential. This thing keeps on going. So if they can take out that low, if they can hold that pullback and they blast, right? They jump off that moving average. Remember, even if this is only a 35% winner, it's still going to work 35% of the time. So you will see times where it does work. I'm not going to short that trade, right? That's not a trade you can build your career on, right? You take too many of those and you won't make any money, right? Anyways, so once they break down and they jump off that moving average, then we've got a new breakout going lower. Now we can go in and really increase our odds now and grab the first test off the high of that channel, right? Again, breakout leg or first leg, right? Third leg will help you identify the best final targets down there, right? There's a big range below there too, right? There's a big range down there. And again, you guys can see this on a 60-minute chart, right? If you go into the description and grab that 60-minute chart, you'll see why I say there's a big range down here, and you'll see what those levels are, right? Those are the next big objectives there for the bears. So will we get that fake out breakout? Will the bears hold this? Or will this thing just crown reversal and whoop right back up? Tomorrow we'll definitely know more. We'll know more in a couple hours here as we get into the Asian session. All right, guys. Boy, great day today. Great work on the game plan for tomorrow. Again, I'm not a big believer in predicting. Right? When you predict, you only give yourself one or two ways to make money. This is what we go over. We plan our trades that tomorrow we can trade our plan with more clarity, right? More confidence. Anyways, guys, I'll put all of the free trading course stuff. I would definitely recommend grab the free trading classes, learn the basic strategy. That will get you going in the right direction. And then don't forget, if you want any help getting joined up as a new student and a member of our trade room, or if you have any questions, right? Any help at all you need, the easiest way to get help is to call the office, send us an email, jump on Skype. We got live chat right on the website as well. And again, I will always be there answering questions in the comment section below. But the easiest way to get help right away is just pick up the phone and call the office. My wife, Megan, and I are always here standing by to help out. All right, guys, hope you learned a bunch here tonight. Great job today. Thank you for watching all the way to the end. Don't forget, hit the like button if you guys enjoyed tonight. Make sure you subscribe and don't be afraid to share this video with other trading friends. Definitely share the link with some friends. And tomorrow, 8 o'clock Eastern time in our trade room, I'll see all the members tomorrow morning bright and early, and we'll trade Reaction Thursday. If we don't see you guys tomorrow morning, we'll come back tomorrow night. Another big video tomorrow night, getting ready for Non-Farm Friday. I'm getting excited just thinking about it. All right, get some rest. Enjoy the evening. Thank you so much for tuning in. As always, my name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.